Hi, this is Peggy from War. So our guest today is Suraj Srinivas. So thank you so much, Suraj, for being with us today. It's great to have you.
Thank you, Peggy. It's a pleasure. Actually, I would say the pleasure is all mine.
So you're Director Strategy and Execution Lead at RBC. You're extremely well versed in financial services and everything related to the new normal. You've been, I would say, knee deep in all the recent changes. So we're very fortunate to hear your thoughts today.
Thank you, Peggy. Again, the honor and the pleasure is mine. I really appreciate you having me here today. Thanks.
Thank you so much. So let's get started with the first question. So from your perspective, what will be some of the lasting impacts of COVID in the financial services industry?
Mm-hmm. Well, Peggy, I think everyone shares deep concerns on the extent to which economies are experiencing a disruption in supply and not mere disruption. I think because of this, once viable company permanently with many people their attachment to the labor force, and I see this impact extending to the midterm at the very minimum. In terms of past impact, obviously creativity, innovation, and nimbleness will all still be highly prized, maybe even more so in the new normal. But I think the concept of value and the traditional drivers of value are beginning to change. Current financial market valuation 4 to 5 firms reflect profound uncertainty over the path of the virus and the length of time that the global economy will. And I'm sure there are crunchers in every firm trying to analyze the extent of continued loss in earnings of their firm and to bounce back. But the variables are just too many. And an event like this is obviously unprecedented. So in terms of impact, I see 3 things. One, expect to see a further fragmentation of global economy in the near to midterm, and a careful assessment by firms of their supply chains, just more on local interconnected global operations. Two, destroyed cash flow and increased financial support will impact the enterprise value of companies to the point where higher debt will no doubt increase the riskiness of the and weigh on the capacity of capacity for growing, which kind of brings me to my last point, which is balancing risk and resilience will be key, as there will not be for with minimal liquidity, stretched supply chains, and contingency plans. I think COVID by many is being equated to being at a war. We are no doubt in a collective war against the virus, but also in a war against the destruction of jobs, a war against the destruction of value, destruction of our societal and economic to connect, and all of this will require firms to exercise pure stakeholder capitalism. And when it's over, companies will be judged by what they did during the war, how they treated their employees, their suppliers, their customers, and they'll be judged by who shared and who hoarded. And personally, I think that philosophy extends to each out of COVID, as the ones that catapult themselves in their lives and in their careers will be the ones that are striving to make a difference in their workplace, in their communities, with their families, and also focusing on their inner self and constantly looking at ways to make themselves more resilient as well.
Yeah, and that's something that came up a lot. This idea of communities, this idea of putting your clients first, your supplier first. So I do think that's hopefully a change for the best that will come from that crisis or from that war. Changing gear to regulations. So what do you think will be the impacts on regulations coming up from the current environment? So do you see changes in regulations coming up from what we see right now, whether it's open banking or anything? What's your perspective on that?
Yeah, sure, Peggy. I think the key difference with this downturn, unlike other economic downturns, is that the fall of output in this crisis is not driven by demand. The fall of output in this case is an unavoidable consequence of measures to limit the spread of the disease. And I think the role of economic policy in most countries will not be to stimulate aggregate demand, at least not right away. And I think we're slowly seeing clarity and delineation of policy in two phases: the crisis phase and the recovery phase. During the crisis, to guarantee the functioning of essential sectors, helping to survive, and policies to prevent economic disruption. I think the success and pace of recovery will depend crucially on these policies undertaken during the crisis. And if policies during crisis, successfully ensure that workers do not lose their jobs, that renters and homeowners are not evicted, that companies can avoid bankruptcy, and that business and trade networks are preserved, then I think the recovery will occur sooner and more smoothly. And I think greater intervention by the public sector is justified by the emergency that we have. And as long as we have that emergency, and as long as we have these exceptional circumstances, they obviously must continue. But they must be provided in a transparent manner and with clear sunset clauses, so that expenditures do not indefinitely continue into the future, and recoveries can begin in a timely fashion. So I think we'll continue seeing policies in support of households, businesses, and the financial sector involving a mix of liquidity measures, such as continued provision of credit, postponement of financial obligations, and solvency measures such as subsidies for maintaining employment, equity injections, and government guarantees. But the critical differentiator is, or rather, the difference is the situation with advanced economies versus emerging economies. I think it's already been challenging even for advanced economies who are financing an extraordinary increase in expenditures, even with their revenues dropping. It has been a bigger challenge, I would say, even more so for low income and emerging economies that face capital flight. And there have been some measures to get grants and financing from the global community, but it remains to be seen how far-reaching and impactful those would be. So while all of these domestic policies are critical, they need to be supported by maintaining international trade and cooperation, which I think are essential to defeating the pandemic, as well as maximizing the chances of a quick recovery. And going back to your question on regulation, and I don't know if this would or wouldn't be regulatory driven, but I do think companies will adopt new business models and build new ways of measuring risk and resilience to sustain anti-fragility. Banks in particular, I think, will see more and more of real-time data and analytics being built into credit decision engines in order to monitor and manage credit risk post-COVID.
Yeah, I agree with you. The decisioning is a part that's going to need a lot of thinking in financial institutions. I see actually a lot of big tech going in lending more and more. Shopify is a firm. Obviously, everyone is partnering with Goldman, from Amazon to JetBlue. And I'm like, is it now that I would like to go deep in lending while I don't have any understanding of these new partners, new clients, and we don't even know how to assess, even in normal time, but it's even worse now. That seems to be a dangerous value proposition. So I hear you regarding the underwriting of a credit.
Correct. Yeah.
Um, in terms of resetting competitive positioning, so you're obviously working at one of the largest banks in the world, but you're very, very familiar with fintechs and smaller technology organizations.
Right.
Where do you see the crisis making a difference in the way the competitive landscape is going to be in the next foreseeable future?
Well, Peggy, I think like I mentioned earlier, it comes back to the classic notion of stakeholder capitalism. Who is responding faster to the needs of their customers? Who is leading with empathy and compassion to their employees? I think companies that shine in this crisis, doing the right thing for their customers and society, innovating and ideating, will most definitely exponentially grow post pandemic. And companies that act like monsters during the crisis, treating their customers and staff badly, will fail. As simple as that. And large financial institutions, to your point, Peggy, I think they have the capital and the wherewithal to not only survive this crisis but also be a part of the solution. Although some have struggled to transition their operations from office to more home-based environments, I do think most of them are on the digital and tech transformation path, which may not be as accelerated as smaller, more nimble firms, but is still substantive to not pose a threat to their existence. The story for challenger banks and fintechs, on the other hand, is evolving quite differently. And we have seen some continue to be resilient in this phase and continue to successfully innovate to combat the crisis, such as Stripe, Robinhood, Revolut, and challenger banks like Starling. But at the same time, there are others who are failing as well. It'll be especially difficult for fintech startups, I think, that were just reaching a funding round. If they were running out of money, what will they do? We've already seen venture capital backed funding having dropped significantly this year. And liquidity, no doubt, is king during times like these. And firms that continue to be nimble enough to pivot their strategies and to continue to innovate to meet the evolving needs of customers, those firms, I think, will be successful in the long run.
Yeah, I agree with you. And so if you zoom in on incumbents or large financial institutions, so obviously in the last few months, they've been busy, making sure their employees were safe at home. They were able to serve their clients. They were also, doling out the capital from the government. So all of that has been managed pretty well, actually, for most of them in the last 4 or 5 months. Where do you see the next phase of that digital transformation we've been hearing about for the last 10 years?
Right.
Accelerating and coming together.
Right. Well, I do want to go down the path of digital transformation, Peggy, but I think enough's been said about that topic. Particularly, some of your own radical insights and thinking in this space have been phenomenal. So I do not want to regurgitate about digital transformation. I want to approach this topic with a slightly broader and a more longer-term lens. And I'll go back to my analogy of the COVID crisis to a war. After every big war in history, the rallying cry by the survivors was always to make their country fit for their heroes to live in. And this is a war against an invisible enemy. And our ambitions should no doubt be bolder. Nothing less than to make a fit planet for our children and our grandchildren and and our great grandchildren to live on. And to do that, we have to face an even bigger enemy called climate change. And that war has been looming for a while now. And we need active steps to combat it. Humans need to stop with their excesses and their exploitation of the planet and absolutely look at sustainable living. And I see a new form of multilateralism, that is needed now and must be based on a vision of development that puts climate at its core center. And maybe the new normal will see us evolve into more remote, more distributed ways of collaborating and working. Perhaps the concepts of real estate value will flip, with cities no more being the epicenter of financial activity. Perhaps that will reduce the stress of urban and suburban systems, while also enabling rural development. Perhaps that will also reduce commute significantly, and all of those give me hope for a better future. But that's nowhere near enough to combat climate change. And just as banks are a part of this solution to combating this particular crisis, I do think they can also act as a catalyst to addressing climate change effectively. Climate change, I think, is one of the most pressing issues of our age, and the financial system needs to be leading efforts to support clean economic growth and help and enable everyone to transition to the low carbon economy. And I'm proud that RBC is leading the way with their climate blueprint by setting a target of 100 billion in sustainable financing by 2025. And this goal supports investments in sustainable companies and projects that are widely recognized as contributing to the low carbon sustainable economy of the future. And I do hope our trailblazer efforts in this space will have other FIs join the transformational journey of fighting climate change, Peggy.
Yeah, and impact investing actually have been one of the topics that came very often on these conversations. And the Europeans, and obviously I'm obviously biased towards what's happening in France, but they've been leading the pack and making sure that the greenwashing is something of the past, and that we're really looking at real impact, positive impact when we're looking at SRI. So again, one of the good that hopefully will come from that crisis or that war, it's really this idea of, okay, do we need to consume that much? Do we need to travel, fly that much? Do we need, and can I vote? It's nice for me to say I'm very supportive of the environment, but you know what? When I'm flying every other week,
absolutely.
You reconcile that when I buy a free pair of shoes every 3 weeks. Is it so I think that has been a good wake-up call for many of us. Now we want to make sure that we capitalize on that as fast as possible, because unfortunately we tend to have short-term memory. So
agree more. Yeah. Very true. Yeah.
So last question for you. So what has changed in the last few months in your life? Did you pick up good habits that you want to share with the audience?
Some nonsensical ones, some decent ones, I would say. Well, for the first 2 months, I went berserk with growing a stash, and then growing a really long beard. Because why not? After my friends, family, and finally I got sick of it, I had to do away with it. So that was certainly a change. I also do not need to wake up early anymore and go through the routines of getting to work and back. So commuting to and back from work, always required me to find ways to keep the interruptions as less disruptive as possible. And I must say, I don't have to go out of my way nowadays to think of ways to be just as or more productive at home, as there are no more interruptions of commute or going to the food court to grab a meal, etc. So everything is now within an arm's length distance. So it's been terrific. On the work front, I have been involved in many intense projects, one after another, and they were all to support our customers through these difficult times. And I must say it has been hard, but also extremely fulfilling in many ways, as it really feels like I'm working towards making a difference in the community. What that has obviously meant is long uninterrupted hours working away, which can take a heavy toll, even more so at home, because you never know when to actually stop.
Exactly.
So I'm constantly looking at ways to bring a balance in my life and develop new habits to grow spiritually, philosophically, emotionally, and just make myself a better human being. And this has meant a lot of self-learning on YouTube, forcing myself to take some time off to spend quality time with family, continued conversations with mentors, hiking and biking and meditation, and just finding opportunities to be one with the nature.
That's wonderful. Thank you. And this mindfulness you were referring to is also something that several people have mentioned. And I think it's very close to your point with being one with nature and trying to look at the world from a more kind, maybe, perspective and sustainable long-term perspective. So I'm praying that we will all keep our good habits. I've been as well on the meditation and self-reflection bandwagon. So trying to have that every morning, and if I don't, at least once a day, so at night. And I know that in the past when I tried that, work has always came, and war is ugly head next to me. So now I'm trying to make sure that, that 30 minutes is protected because it's going to get us more productive at work anyway.
Agree. Agree.
So, but thank you so much, Suraj, for sharing your thoughts. It was, very insightful, very thoughtful, very different. I really appreciated you putting, a lot of, thoughts and insights into it. Thank you so much.
Thank you, Peggy. Like I said early on, your insights in this space, your work in this space has been phenomenal. Thank you for engaging so many other experts in the industry. This collective view certainly will tread the path going forward. So really, really thankful and appreciate what you've been doing, Peggy. Thanks so much for having me again today.
Thank you so much, and see you very soon, Suraj. Take care.
Take care, Peggy. Thanks. Bye-bye.